Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing Francis Hunt, also known as the Market Sniper. How you doing today? What are you sniping today, Francis?
Darrell, good to be with you. Thanks for having me back on. What are we sniping today? So I'm currently back in short Bitcoin. I had a good initial run that was very profitable. It had a spike rally, actually, and I'm rolling into that. I'm sniffing out gold for upside at the same time. We've done many draws of the Bitcoin in gold ounces, and I highlight that it was at 40.7 ounces of gold to one Bitcoin in and around the peak of Bitcoin, and we're at about 13 now, 13.7. Wow. So that just illustrates how we have reverted physical. And just before I hand back as well as an opening statement, it's quite interesting to see Bank of America taking it back stateside. I know you're just getting started on your day, was saying, yes, or gold, silver, looking a little bit bubbly, and the Kospi, which is an interesting index. It's the Korean one's, South Korea's equity index. And it also is a co-plays with the US dollar, Korean won. So those are three markets that are very interesting to us. I, of course, don't see gold or silver as a bubble at all. I see debt and fiat as the bubble that's in a process of deflation. I know you want to touch on the Dixie and the dollar, so I won't steal too much thunder until you're ready. But yeah, as an opening statement, that's what we're sniping and that's what we're observing. Bank of America calling gold and silver bubble-ish and the Kospi, but quite comfortable with US equities at the current level. So there you have
it. Yeah, that sounds very backwards. So let's start off with gold and silver. Could you pull up the charts and just let's look at gold, where we're at. We had a big blow off top back in January, the end of January. I'm sure folks are wondering, okay, did we top? Are we leveling out, building the base again? So just curious in what you're seeing on the charts.
Yes, good question, by the way. And I think the charts are the place to get the answer for that as well. So I'll start a share. Just before I do, I want to highlight that people should remember there's a macro. There's a difference between leverage trading short term and investing for the macro. And so time frames, you behave differently on leverage. A lot of other things apply. But if we just go to the investment hypothesis in gold, our primary macro view is more upside for gold. So people will say, but hold on a minute, Francis, we had this big ass sell-off, you know, we were at 5,600 and then bang, we got this rejection. And of course, it closed lower as well. It was a red candle. It was one of the first in a while. And at one point, you were as low as that. So technical analysis, macro technical analysis is our forte. It's one of our unique USPs. That would be typically called a shooting star. And it is a bearish candle on a weekly time frame. So let me just clarify. We're looking at gold. We're on the dollar. We're on the weekly time frame. And that qualified as a shooting star. Now, there's only one way you negate a real shooting star. And that's where you deliver the exact corollary to the same degree of volatility candle. So what is the corollary or the countervailing force of a shooting star? Well, it allows for the ongoing downside initially. So you closed here, you opened here, and you traded immensely down on that wick. So that is still the impact of the shooting star. However, if you're to negate it, what you need is a similar scaled reversal. So here was the upside reversal, and there is your downside reversal. Go past your open and close the week higher up on the week with a green body. So what you've actually got here, and we called this after 2 days. Many people saying, but how can you say that on the weekly candle? The weekly candle wasn't even finished yet. And our goal is to be early. You can't say anything about the future with any great confidence, but our expectation, given the volatility and the rebound, at that time, this was a slightly red candle and it was roughly here, but it had a big hammering wick on it that already highlighted quite a high element of rejection up to here. In the end, at the end of the week, it had gone all the way up to there. So we turned out lucky or accurate for forecasting that. And it is a negation of the volatility reversal to the upside to have an equal, similar, and proportionate volatile rejection of the lows to a similar degree. So the new week, which has just started here, and it's this little abandoned baby over here that's tiny because we've only 2.5 days in. I know you guys on the US side are only waking up, so to you it'll be 2 days. We expected reflation. So we are post slap in the face events of volatility. We have been in the camp for quite a while now. 2 days into the previous week, we were already saying our suspicion is this is going to be reflation, and that was validated by the weekly close. And what have you seen? You're seeing a green candle mildly up on the big time frames. So that's the big time frames. I've actually said quite a lot. So before I drill down any lower, I'll just hand back to you.
Yeah. So that's really good to hear. So obviously investing in gold, holding gold as money for the long term, the macro thesis is important. And so I've been in gold since 2020. I know that some people have bought last year near the highs. Some of them may have bought this year near the recent highs. And so they're probably curious, like, okay, is this over or what's going on? But, the debasement trade still seems to be on it. So I'm curious in your perspective on the who's buying this dip. So I saw a recent article that the People's Bank of China is continuously buying the dip. Central banks are buying the dips, or buying consistently regardless of where the gold price in dollars is. So just curious in your perspective there.
Certainly people are taking delivery. And this discussion doesn't have the fullness that it needs without us first discussing the dollar, because we're talking about gold in USD. So there's two halves. One is the XAU, the other is the USD. And we should be a full half guy. We should see both sides. And this is where the dollar is currently. And we made a YouTube on this a couple of last week, I think it was. I don't want to say exactly. I'm not sure I'll be accurate. But if I just release these annotations that I've done, this is a very important chart that we've drawn. We've highlighted the $100 level in the blue line here. Since 2008 lows, this has been in a climbing channel. So we have actually called the dollar long. We're not just haters on America. Some people sometimes think we're not. We love the American people. We've always got on very well with them. They're great people. Sadly, what's gone on as a hegemon and the people that have been looking after their money haven't always been the best kind of people. But, we called this long on that target that came out of this upside HVF, for example, some time ago before. But more recently, the news has been bearish. And you can see the support the 100 was. It kind of kept these lows at bay. It kept those lows at bay. It kept those lows at bay. Then you broke the 100. And I'm going to zoom in this more recent history. This was just to show people that you've actually had an 18-year trend that is in a state of breaking down. A state of breaking down. Let's get rid of that Fibonacci there for a second. And you've now broken below the 100. And we've been entrapped in this sort of squeeze box of this ascending grind line and the 100 level. And we've been rejected after running 100 both times. And now we've broken that to the downside. We're on the monthly time frame, by the way, just to remind everybody. We're on a monthly time frame. And here's my concern for the dollar generally. You've got to remember record deficits against Euroland and China. These are real problems. And the Triffin's dilemma, a quick explanation fundamentally while we're getting the chart ready. When you're the hegemon, this applied for Britain prior. So as I say, please don't see me as beating up on America or Americans. When you were the hegemon, you export debt and your currency in lieu of excess received goods. So you typically get more imports than you have exports. Those other countries are not buying enough American items, China, Europe, but they are selling a lot more BMWs, Mercedes-Benz, or Chinese goods into Walmart, etc., than you are buying of their stuff. That deficit is being recycled into paper, and the paper is debt instruments and in your currency denominations. So your job is to proliferate your currency. We have now got to that point where we've reached peak proliferation, which is why our debt call in 2020, the debt markets have turned, and this is the most important call we've ever made, is such an important call because the acceptance by other nations of that paper is greatly reduced and reducing further. This means treasuries are no longer sought as pristine collateral, dollars are no longer wanted to be had, and this is why we see the movement in gold, a monetary metal, a commodity that is actually a monetary metal and is money, all else is derivative proxy. We got so used to dealing in derivative proxy that we think the derivative proxy is the money. Gold is the money. Silver is the money. The derivative proxies are in trouble. So we're drawing a bear flag here for this, and we're saying you've come off a massive selling off down leg, and you formed this flag. You had a little rebound to the midpoint. You broke down. You had a gap down. You had a return move, and now you're rolling over. So we could see this going down. There is a possible target suggested. That doesn't mean it's always fulfilled. There's no 100% in pattern trading at around 87.738. That means more dollar debasement relative to another group of lepers that aren't much better. So you're not winning when you're losing ground to an already bunch of stupid. And that's the euro, 52% in here. There's a little bit of franc, there's a little bit of pound, there's a little bit of yen in there as well. The dollar's winning broadly against the yen, but it's become a lot more choppy. So these other currencies like the franc, it's losing quite a bit of ground. And the euro, it has to be said, which is not to say they are sound money. It just means in the relative world, given how big your overdraft got to be as a hegemon, you have been able to proliferate far more, and as a result are facing a far larger debasement. So I always push back against the trope, the dollar is the cleanest dirty shirt in the laundry. It is the largest and dirtiest, and it's by design. That's not a beat up again on my American friends. It's Triffin's dilemma. And when people say, but Japan, add the unfunded liabilities of both nations in. Japan goes from 253% to 350% debt to GDP and buys its own debt. America goes from 135 odd to 600%. So you're going to renege on those commitments, or you're going to debase. Either ways, both are reneging. It's just the manner in which you do it. So I'm on the weak dollar. Even if you did renege on Medicare, reduced how much you paid, all the people who've been paying all their lives suddenly get told they're going to get less, and those old people vote. Let me just remind everybody, you're going to end up with needing dollar debasement as well. So here's where we're at. This is part of the story. Gold wins here. Bank of America saying gold's a bubble, silver's a bubble, is absolutely propaganda framing. It's an Overton window that fails to recognize that we are in a scaled fiat and debt debasement period that will run and run and run until you've had the equivalence of bank failures, you've had debt markdowns, haircuts, all forms of embarrassing events that America never thought would befall them, probably some martial law, some social unrest. And in terms of inflation for Americans, the idea is actually to make imports too expensive. This is part of rebalancing these record deficits. You must buy less foreign stuff, because your cost of living is going to go up, you're not going to be able to afford it. And this is how they'll rebalance away from being the once hegemon with the Triffin's dilemma and the exorbitant privilege of exporting paper to somebody who no longer can export paper, fiat, treasuries to the same degree. Let me hand back to you.
Yeah. You dropped a lot of bombs on us right there, which I actually appreciate. You know, it's facts over feelings. So I've been reading Ray Dalio's book, the How Countries Go Broke, and he's been very vocal lately about a monetary order breakdown, capital wars, and such. And he's been going on some of the biggest platforms. I mean, recently on Tucker Carlson, and really explaining like these dynamics. And so I'm curious in your perspective. So like, obviously, you know, currently we have an administration that's wanting to reshore manufacturing, you know, bring back American production, export goods versus like more, cleaning up the deficit and such, tariffs, all of that stuff, right? But we live in like a 4-year to 4-year cycles within this political dynamic. And, when Ray Dalio talks about the political order breaking down as well, it's kind of like you don't really get any stability in that, and so I'm curious in how you're framing that as well with the hegemon.
So it's a mathematical certainty that the dollar gets chronically debased. There is no fixing what is turned into multi-decades, almost an entire boomer generations of malfeasance of investment and currency proliferation. There is no there is no amount of cuts that can do that. Your tax take is about 50% what you spend at the moment, and to remove those expenditures is almost impossible. In fact, the discretionary element of budgetary allocation is surprisingly small. A lot of the expenditure is pre-committed. Just maintaining your military industrial complex and not adding any items is incredibly expensive when you've got the scale and the machinery, especially if you've got white elephants like the F-35 that keep falling out the sky and having computer glitches. Just maintaining your existing Medicare and your pensions to veterans and the Teachers Pensions Association and all of these. Don't forget you've got an inverted pyramid of demographics that is coming to, it's an actuarial nightmare in terms of pensions. You used to have 14 young working men and women holding up one pensioner. Now you have 3. All of these things are mathematically unfeasibly unsustainable. So it's not if you crash. It doesn't matter how good the pilot is. I sometimes say, I put the 747 in a near vertical dive into the base of the mountain, and, half a second before impact, I hand the controls to you, Darrell, and say, you're the greatest pilot in the world, save us. Well, the greatest pilot in the world can't do anything because, he can pull back on that stick as soon as he gets his hands on it. But with the half second traveling at 800 kilometers per hour, we're just moving the needle slightly on where we're hitting the rock, the nose cone. There isn't, that is how far it has gone. The snowball has been rolled and rolled. It's gained momentum and it's now heading down the hill. It's hitting the village. There's no Superman that shows up and holds it back. Gravity and the extent of the mathematics, the fact that it's scaling on a parabola, you don't chase a parabola down. So this is something that gets to happen. Even if it was stoppable, let's say I'm entirely wrong with my assessment, you have to have the political will then to stop it. And even Ron Paul, way back, if he'd won the presidency back then and did all of these cuts and reduced bases, I don't think you would be able to turn it even if he'd done it. But he would have started taking those the right steps. You would have needed 3, 4, 5 terms. I'm using an American example of someone who actually had the right ideas and didn't seem to be subjected to captive interest across the larger banking cartel system that we end up with. So you're hitting the wall, sadly. And I sometimes use Inception, the movie. Most people remember that. There was the Leonardo DiCaprio with the multiple time frames. You dropped a zone and seconds were years on the higher zone. And you may recall the guys drove over the bridge and were crashing into the water. And all the bodies were, they were breathing and they were coexisting on lower time frames right into some Arctic level where they were chasing people down. But the car's already driven off the bridge. The car hits the water. There's no saving that. That's an inevitability. You have to get everybody back into their bodies and bracing for impact for that. That's where you are. So a lot of what we talk about is accept the inevitable and plan for the outcomes of reduction of damage to you, wealth preservation, security, and many other aspects that go hand in hand with this, and maybe moving out of being in zone 1 of the impact, the meteor strike. Being in zone 10 is a lot better than being in zone 1. You don't want to be in the localized area when the meteor strikes. And that's why I've said to a lot of Americans, establish a footprint outside of the Western hegemony generally, because while it'll be worst for America, the United Kingdom is going to follow you down. It won't fall quite so far. because it never had quite the same privilege, but it's going to fall hard. So you want to look outside of the Western hegemony for having a footprint in existence, maybe a home. Now it takes a while, but if you're investing and maximizing your gold gains and your silver gains, you should be resourced to position differently for this. And that's a really hard message. It's not a popular one. I'm sure most people listening to me going, I am leaving, we'll be best, I'll go hide in the mountains with a gun. Well, here's the problem. The jurisdiction is a legal entity. It's a nation state. It's about infrastructure expenditure. It's about a lot of things that suddenly get switched off. Hiding in a mountain in a gun was better than maybe being in an urban area, but it doesn't solve all your problems.
George and his team, a 16-year VRIC employee building some of the largest mining operations on the planet. We started a drill campaign, from the drill campaign moving into a full engineering report and study. We came out with our pre-feasibility study in 2021 and it showed a really impressive economic case for advancing the project. We'll have final definitive feasibility out in December of this year. So in the space of 4 years, fully engineered, fully permitted. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
Yeah, and what you highlight here is like everything has just been compounded, because you mentioned like if Ron Paul would have made some drastic cuts and such, it would have taken so much compounding from there to even try to even turn this ship around, right? And then you have other folks being elected that run up deficits and deficit spending, and now we're coming to the end of that. I'm curious. Silver. I want to touch on silver and copper. So recently, a friend of mine had texted me because we were talking about the $12 billion stockpile of critical minerals, and obviously silver, copper being two of those. And then he texted me an article and shows that China invested $500 billion in their power generation and things of that nature. And so he was like, yeah, this makes this little 12 billion look like peanuts. And so just curious your take on that. And then also, what is silver telling us? Obviously, it's a monetary metal. We have this government stockpile dynamic as well as industry and such. And so just curious on your perspective there.
Yes. So China generally has been far more serious about its investment. It's almost like America kind of under this Trump regime have suddenly woken up and then making these token gestures because of the news. It's almost like, you see, we are now starting to act too. But the amounts are trivial. I think America mentioned 12 billion. China has been doing for multiple years, decades, substantial investments and growing soft power where it is not so offensive, but they are actually real movers and shakers in Africa and in all sorts of areas without being overly bombastic and domineering and working with existing governments. So in some senses, they've been smart. They've been slowly catch the monkey in that sense, in terms of how they've gone about ensuring supply. And of course, in the Middle East and various other places where they've been cooperative, good partners, whilst America seems to have lurched into suddenly waking up and actually doesn't have the means, in truth, to do it on the full scale that China has been accumulatively doing for an extended period. I mean, we all speculate on how much gold China truly has, but I can tell you all black gold that is being subsistence mined ends up via Saudi, UAE into Hong Kong and Shanghai. As someone who's living in Africa, there's a permanent bid on that and the refining process and taking it. That's not what's being bought officially declared through futures for delivery where you can track and all of this. This is even on the what I'd call the dark metals level. Mm-hmm. They've been stacking and they must have an absolute fortune. And they've set about using gold as a trade-based vaulting system for their trade system. So they're going to establish vaults for counterbalancing. So they're going to go to a backed currency. It's not about the yuan, it's backed by gold. People really don't care what the piece of paper says if it's backed by gold. It can have a Chinese face on it. If it's backed by gold, it'll be worth more than, Abraham Lincoln or Benjamin Franklin or anybody else, which isn't. So they're winning in terms of the long game. and the hegemon has an uneasy role, and this has Death of Vampire vibes to it, and that's what Ray Dalio, who you also mentioned, has been warning of. The fullness, though, is that the debasement in dollar is going to cause rampant inflation. We called the labor lies during the Biden administration, and that's largely been accepted now. Millions have been stripped out. There was a lot going on in terms of government hires for various agendas that are BlackRock related. You name it, they did it. And these were sold. Oh, but it's a red hot economy. We didn't have, we didn't have a recession. It's a red hot economy. So that's been shown to be a lie. Now with this relative underperformance of the dollar, don't forget it lost 10-11% to the euro. It was down about 15% to the Hungarian forint and 40% to the ruble, by the way, who's supposed to be a sanctioned nation, who seems to be doing extraordinarily well, selling their oil via intermediaries or taking a cut. You're still probably getting it. The only beneficiary is Europe, who's paying much more for their energy and is therefore no longer making the profits they made for the pipeline being shot and everything else. So the whole grand game is going ahead. Your question was also about copper, and the one thing I'll say is all commodities will go up, but your monetary metals, because this is a fiat and debt debasement crisis, the biggest winners are the monetary metals in that. So many people want to sprawl out of gold into other things because they're going up. And I always say, yes, copper is going up, and I will show that chart to you. So here you are. There's it going up at the moment. And it looks like it's squeezing higher. It's recently at all-time highs here. And then I say, but your basis of account, the dollar, is an invalid basis of account. It is the worst performing major fiat. By the way, I'm sitting in South Africa in Cape Town. The dollar topped out in the rand at 20. And we said, that's it. This is peak dollar against a failing government here. In actual fact, the rand is now outperforming the dollar. The rand is now, and it's sitting at the low 16s by description. So that is, and this was a long trade. Everybody wanted dollars in South Africa. There was foreign exchange controls and all sorts of things. People dumped rands for dollars. It was a sure thing. It was a multi-decade thing. Now it's turned, and I'll maybe share that chart with you because it'll just show you, how in some senses the mighty are falling. This is a massive falling wedge. What are we looking at? We're looking at the copper continuous future that was on a monthly divided by gold. So yes, copper is up. You saw the chart, all-time high in dollar. But what does that mean in the new original, the old money standard of gold? Which is now the new one again. We've gone the full circle and we've gone, you know what? Gold ounces are the way to measure your wealth. Well, in that sense, we are seeing a debasement of all assets to gold, with the possible exceptions of miners, silver, platinum, and very, very few things. And here you have a consistent grinding out of copper. So are you better served being long copper than gold? Right here, right now, I'm saying no. Your new benchmark is the harshest benchmark, and you are in debasement times. You're just using the wrong basis of account, and they are playing monkey money games with you, showing you this depreciating fiat and saying your house is still worth the same. You're doing great, or you must pay us capital gains tax for making money on your house because you made more than what you bought it for. But that unit of account from 2-3 years ago is not even the same unit of account. In gold ounces, your property is rebasing downwards. Everything is rebasing downwards. And here's a chart you really liked. It's rebasing downwards. We actually have an upside break on oil that we expect for the first time. We've been relatively quite bearish. Oil, we've highlighted that it's going to underperform generally the monetary metals. But let me just show you an interesting fact. We've got a technical setup for it. Your guys can have a trade if they like on it, if they like the setup. There it is right there. This is on the hourly, and I would use our HVF method, which is a unique bespoke methodology that we use to trade. And I would say, there you go. You've got a trade coming for you in oil. We can see 69, that probably means a technical run back above 70. But then go and that's a bullish trade for now, but go and see how oil has generally done against our friend gold, our harsh, stern master of fiscal discipline, and you will see that it's a totally different story. I'll put it out on the monthly, and you can see it that in actual fact the oil has been rebasing downwards. In fact, we've got a head and shoulder draw. I just want to miss the COVID spike, it distorts the chart. We have pulled this downwards for an extended period. Head and shoulder over here, boom, boom, bosh, broke over there. Targets being run, see that target rally, down, 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 a hammer now. You're going to get a little bit of an up move against the dollar for oil, but you may find that you're getting a better move in gold to the upside. And that's where everyone should position. So once again, in a debt and fiat-based collapse, which Bank of America is not telling you about because it affects the banking system too, have the monetary metals. Precious metals, gold and silver, will be the outperformers of this cycle.
Could we look at the gold silver ratio
Sure.
and just see where we're at with that? And then also I wanted to look at just what's your perspective on the miners. So obviously the miners are getting it out of the ground, all-in sustaining costs, which is a general broad way of measuring how much they get it out the ground at, is significantly lower than where the price of the metals are in U.S. dollars. And so I'm curious in your perspective there too.
Further to which I would highlight the debasement of oil, that when we first called short oil, long gold, it was $87, having been as high as 129. It's now at 69. I think my apologies, not even 69, but it looks like it might target 69 if that break up to the upside occurs. So maybe call it even 70. The costs for miners have actually gone down during this period as their top line has blown up to the upside. So you are talking about a cash hemorrhaging corporations here, and they look absolutely fantastic. And you asked about the gold silver ratio, and it's a great question, Darrell. So I want to take you back straight into the weeds of that and say, you remember what I was showing you in the gold chart with the shooting star that had the intra-week reversal. It had a body like that was red, and it had that huge wick that did that. And how I said the only way you negate the bearishness of that is you have a squaring up and an equally strong reversal to the downside like this. Well, look what's happening here on the gold silver ratio. We were talking about the gold had that shooting star, and that's actually a very bearish candle, especially on a weekly time frame. That's quite a long one. You had that shooting star. And then I said, one of the only real ways that you can put it back into bed and go back into the reflation and upside is if you have a hammer to the downside of equal scale, then you continue back up. In other words, you had a blow off, you had a collapse, you had an overshoot to the downside. Now you're bouncing back, you negate that. Well, you've had very similar here. You've got a very strong hammer, which is actually bearish for precious metals. The gold-silver ratio going up, it's actually generally bearish. It doesn't have to be hugely bearish. Gold can sometimes go up in that environment, and silver can be flat or mildly down. But what we're now getting in terms of this month is you've had a reversal on the follow-through here, and it looks like this green candle is coming back down. This green body may end for the month, and bear in mind, we're only the 10th. So again, I'm calling early. But you're probably going to have a reversal, having run up to back into the 70s. And we expected this because you ran the key level of 50 on the gold-silver ratio. You ran it to the downsides, you got a snapback rally, you ran all the way back into the 70s, and now you're coming slowly with your way back down. So this is just a period of volatility, a little bit blow-offy. I'll move it on to the weekly time frame, because when I showed you those shooting stars, it was actually on weekly. So you had quite a big surge up, but then you see this wick has come a long way down, and actually you're trading red here. So I think the reflation of precious metals post a little bit of a slap in the face for doing too much too soon is very much back on the card. So dip buying is part and parcel of this. Please bear in mind, this is not the same as my leverage trading that I'm sometimes talking about on YouTube, and that we update our community on, which has been very profitable. So as an investor and a stacker, we say keep stacking. There's no way you're anywhere near the highs at this juncture.
Okay. And could we look at the miners too?
Yeah, I tend to I bring up Heckler because it's a well-known one, so you can see where there's been real impetus behind, and this is classic W bottom right there, and you can see where you had your gaps here over there before you blow off. And if I bring up First Majestics, I've just brought up Heckler, which is well known and understood US miner, and I bring in First Majestic, equally well known, and you can see both cases W bottoms. Again here, and I think you're breaking through that right now. And you're not that far off the top in First Majestic's case. And others are similar. Others, Wheaton, you can do Wheaton, for example, another big name. And I would say a good hold. Wheaton Precious Metals, you'll see that double bottom DNA. I can literally leave it on from the previous chart. There you go. Wow. Just move it around. You're getting the same structure. These are W bottoms. There's a gap that wants filling, and it's to the high side. And new highs to be made in miners. They are cash hemorrhaging machines, mining looking great. And as I say, one of the few things that I suspect that's going to beat gold itself, particularly silver miners.
Yeah, definitely. I can see that too, especially when you do the math and the percentage gains on them. It's definitely a way to multiply your ounces. That's something that I spoke on recently at one of our conferences. All right, so I'm curious your perspective on obviously we talked about the dollar going lower and such. There was a lot of reaction to Kevin Warsh being nominated and such, and at least the headlines were saying like, oh, this is why there's a sell-off. And so I'm curious, what do you see for the Fed and monetary policy in the U.S.?
So it really doesn't matter the political theater and the names. It's the environment they're inheriting that dictates everything. And the environment they're inheriting is dollar debasement. And in actual fact, I think the story goes, Powell's been too harsh on interest rates and held them too high, and Trump officially wants lower rates. You can get involved in the theater of that. If I tend to look at the charts and say, this is a currency that's had an immense privilege that's now being slowly ebbed away from it, and that leads to massive debasement because it runs huge deficits with all its major trading nations, and there's a reluctance to receive what is being sent in lieu of those deficits far more. Hence, I refer you back to the 2020 debt call, why it was so significant, because this is the financial ebbing away of power in America, and eventually that leads to militaristic, because you can't sustain a military 10 times bigger than everybody else, even on maintenance alone, if you can no longer spend what you previously were accustomed to spend, because people are no longer happy to own USTs. So we've continued to highlight rates we expect to go higher. One of the places that we spoke a lot, and I'll share this time, is Australia, but it's going to be happening even similarly in America as well. But I've shown a couple of nations across the Western hegemony that are all in various stages of higher rates occurring. We were the original guys on the Japanese rates going higher. At 0.3s, we were warning people that these were going to go 3s and 4s and 5s. We were like a lunatic fringe, and it was the least interesting YouTubes we did. That was 3 years ago. Now everybody is updating what the Japanese 30-year, 40-year, 10-year, 20-year is doing, and they're all in 2s, 3s, and heading for 4%. But that's the Australian rates. We see similar structures, because this, you've got to remember, not only is the US debt coming under attack as an asset class, I go inverted commas asset class, it also means debt as a whole throughout the world is being looked at differently. This turns out to us to be an upside HVF structure that will break higher. And that's going to be immense pain on housing in the States, where most people borrow, sometimes 95%. Some people are doing zero down deals. And vets are buying $500,000 houses with with no money down. So this is definitely going on. You're getting a small breakdown here, but the long and short of this is that this is a market who has turned, and higher rates are a thing, and it's a real problem. So you bring in a guy that's going to go, yeah, I'll be low rates, I'll be Mr. Low Rates, I'll be more lower rates than Powell. Well, what tends to happen is that gets taken away from him. Everybody thinks the ultimate power resides with one man. This is the illusion of control. The markets decide if they want to hold debt. You can cut rates, as the Fed did, and you can have the rates go up. We've already had that happen with Powell. He did a number of rate hikes, cuts, and the market actually went up in rates on all the standard base marks, the 10-year and on 20s and 30s. So this is a real problem asset class. You don't want to be holding it as an asset class. You want to be short it if you can. TLT is a typical long-term debt instrument. It's an ETF. We were calling this fella short way back up top here in 2020, and this is how it's gone. And if you think that's a bottom, I got a bridge to sell you as well. This debt isn't going anywhere.
Yeah, that's wow. Could you explain the Japanese, what's happened in Japan with the yields? The Japanese carry trade and some of the other dynamics that have been thrown around and mentioned on financial Twitter or financial X. And so just curious, does that have any impacts for investors?
Yes. So here was a technical structure that, as I say, for a long time we've been talking about from down here during this period in 2021. Because the minute we saw the debt turn in the American markets on that TLT head and shoulders, I just drew the neckline there for you whilst you were talking. We expected debt to be in trouble as an asset class, even if originated by other nations. And we started looking at the likes of the Japanese currency right through here, and we were looking at this low volatility period and saying this breaks to the upside, and we were generating huge targets. A lot of those have already been formed. This is debasement of debt, because you've got to understand, as the yield goes higher, the value of the old debt issued at a much lower yield. These are contracts that are issued at a certain time for 10 years, for 20 years, I will pay you this. Their value drops, because if you can take new debt issued by Japan and be paid 3.7%, what is your asset that you're only receiving 0.75% for your $1 million, your $10 million worth? Well, it's not worth 10 million anymore, because you can just go buy the latest one and get nigh on 4 times the yield. So the price, the net present value, is the function of what yield it pays. And if this ends up going higher, still, then you're sitting in a real problem. And in fact, because of the yen depreciation, the Japanese inflation rate crossed the American inflation rate for the first time. I just think America's BLS is better at lying than the Japanese. But rice doubled in a couple of years at a cost level, and is a real staple, obviously, for the Japanese, as you're probably aware. So you're sitting at a country now that is probably getting close to comparable levels of inflation, and comparable levels of rates are inbound. And that was the free carry trade, which was your question, cheap funding. So what tends to happen then is they need the yen to keep weakening, because as it's getting, the margin between the different rates that have to be paid is getting tighter and closer. There's not that free alpha that leveraged hedge funds in the States and in other parts of the world that were borrowing in yen and investing in treasuries. It's not only an American trade. You can have a European hedge fund that might have been playing that game. What you tend to get is the alpha is no longer there. So now you need the debasement in the yen to continue to ensure that what you pay back is less than what you borrow. So that's the only way you make money, which brings us then to the USD JPY. And as the interest rates is closing, which was the big gimme, this is where it becomes essential to watch what the yen is doing. And a major unraveling, this was our scare trade 24, July into September through August, September. This was a wobble on the carry trade that brought the yen from around the 160s level. Now, I must warn you that you're recently very close to these levels where things got sketchy. Here it was, and you got sold off a second time. Here it was. So it's going to be interesting to see what happens here with the because if the yen starts strengthening, that's downward action here because it's obviously the base currency is the US. If it starts to buy less yen, you'll have real distress in leverage, which then starts to reflect on, well, how much of that money is crowded into treasuries, which means that money would have to sell treasuries. That means rates would go higher and treasuries would go down. And how much might that money even have been invested in things like the Nasdaq and other aspects of it? So then you sit in a situation of, okay, what's going on here? And again, there's many people that were highlighting the melt up of the Nasdaqs, and this is all about it. And we've just said, no. The last time you had a clear period of absolutely dominant overperformance by tech compared to gold was literally ended with the dot-com boom and bust. You've had mild periods for medium term, but not for long term. So again, I divide the Nasdaq by the dollar ounces. Let's just go up to the monthly and show you that. Here was when it was absolutely a better time to not be in gold and to be in tech stocks. There you go. Mm-hmm. Golden generation from 1980, peak gold, to 2000, which was the bottom of gold, and substitution proxy of money, .com shares. That was a great period to not be holding gold and to be all in Cisco, Microsoft, and the rest of the gang. You then had the correction down to here. Now you've had a mild reflation period here, but the real thing I want to show you is this head and shoulders. And we called this as it broke. We saw this head and shoulder coming before it broke, and now we're showing it to you as it's breaking. So for people that are sitting in tech stocks, I'm here to tell you that even if number go up in dollar terms, you are being rebased downwards. There's our arrow. This is a triggering event on a head and shoulder. There's your neckline. That's when you came and kissed it there. You've done your head. You came and kissed it with a hammer there. There's your right shoulder. You're literally looking at it right now with me. The Nasdaq on a monthly chart, breaking down, saying to you, you should. And this is how you come to technical conclusions. There's no emotion, there's no hunch, there's no voodoo juice. I don't test the waters of my uterus as some people were doing. I don't have one. We're not going on that cultural Marxism trip. I look at charts, real rational, real arguments. This is your replacement trade out of tech stocks into gold. See it, hear it. You've been warned by me on this channel with you yourself, Darrell. You are doing God's work, bringing this news to people. This is rebasing downwards. And, there's no better game in town than your benchmark gold, apart from possibly silver, some miners, and a very rare selection of things. Other assets that have all been put into bubbles. Gold is not the bubble. Tech stocks, property, cars, which are not really assets, but they're kind of current assets, other things, Persian rugs, vintage cars, wines, art, which is money laundering as far as I'm concerned. Those things are rebasing downwards. Physical metals are only starting to get the respect. This is just triggering on what will then have a capitulation downside move associated with it. Yes, nothing is straight lines, but for a target right down, I'd shock you if I gave you the full numbers of it. Gold ounces are king right now as your benchmark for monetary valuation.
How many ounces of gold would that be to the Nasdaq?
So currently at 4.6. At the recent localized high peak NVIDIA, it was 8.97. So you've already shed more than a half. And I can take you right back to .com era years to give you the ultimate number. And that was over 17. That was 17.78. My suspicion is you're going to find yourself, I need a log scale this, you're going to find yourself far, far lower, potentially twos, and then later even below one.
Yeah, because I saw it made since the 2000s, it made a lower high, and then it's rolling over. So it hasn't reached that bubble period of 2000. Okay, so before we end off, I want to look at Bitcoin. As Bitcoin has been rolling over in gold terms as well. and such. And just curious if you have any target there. What's your view on Bitcoin? Do you think this could be a store of value? Do you think it's just like, just curious on what you think about Bitcoin?
Well, I think all the mystique and the revelation surrounding Bitcoin should have no doubt been greatly tarnished by recent news. It's quite clear that there is an agenda to provide us with a digital proxy as an alternative, potentially, for physical holdings. So my overall assessment is not very favorable to Bitcoin, not morally and not technically. Technically, there's no ambiguity, there's no emotion, there's no hurt in that. This is a bear flag, it triggered, and it's trading to the downside. We took that, we had the rally, we jumped in a second time short, it gave me a bunch of gains, and it's had this sharp rally. Remember, lots of sharp rallies occur on downsides. There's also a head and shoulders here, left, much like I've just shown you on the Nasdaq. Bitcoin is not performing well. That flag is part of the right shoulder. You would have triggered the head and shoulder there. We, of course, were short earlier on the flag. There's a real flag pole to the downside. I'll show you that in a minute. But this is all downside. This is against the dollar. You think I was measuring it against gold right now. It looks so bad. Remember, this is supposed to be your digital gold. That is, money go up because Fed, cause sovereignty, cause liberty, cause your digital gold that'll go up when the dollar goes down. I'm very, very sorry to report it is not serving as digital gold. It is not the fastest, cheapest, most scalable solution. It's not serving or winning in any of its arenas at all. It's not digital gold. It quite clearly isn't. Have physical gold as your original gold. It's not the fastest. It's not the cheapest for transferring money. As a result, and it's quite clearly got auspicious roots, as we've always suspected, from how to create a mint, the paper in 1996. Since 2016, we said, don't get involved in this because you trust in it and because you think there weren't nefarious actors. There's always been this Satoshi Nakamoto, I call him the imaginary Japanese friend narrative, which is feels like a complete construct. And for those that say, well, what does a bear flag mean and so what? It's just technical analysis. It doesn't work on crypto. I often get, all of this splaining that happens. Here was your bear flag. Here we called it in the previous bear market as well, and that target too was also made to the downside. So there's some pretty nasty targets to the downside. Bitcoin is not looking particularly good. And if I were to give you a target for the bear flag, I think you were asking around that. So to answer your question, let's just put those levels back in and on there. You can see that I have a number of flags. We do targeting off a number of assumptions, but you can see there's a 51 and there's even the potential for a 36 to the downside. So 51 and 36. And on a lower time frame, I think you've got yourself a possibility that you might even have a structure here that is not overly helpful as well. Again, people might be tempted to say that looks like a head and shoulders type structure over here. The final thing that you should always do when talking about Bitcoin, as I've done for copper, the Nasdaq and everything else, is say, how's it performing relative to gold? And as I mentioned to you, you can't even begin to see the degree of re-rating because it's re-rating against the dollar currently. It's absolutely re-rating against gold. And again, we do the monthly time frame. This is a rollover. And by the way, the log scale is a bit deceptive in this sense because it came from near zero. So it looks like a lot. In percentage moves, this was a lot. But if you just do it like that, this is a succession of ever more struggling to make higher highs. This was your last bull cycle there. Again, let's draw it with a pen there, and then you made a marginally higher high. You had a huge correction, and there you've barely gone higher. While previously, these were the kind of ability they had. It took much less money. It took much less money to achieve this. Now, much barely higher in gold ounce terms from 40. These were 37, 37, 37. This one was 40. You got this nasty grind line and you got this awful spill. And the other point I made on a stream, funny enough today, that I hadn't noticed and still I counted them. Never before against gold have you had 7 months of downside in Bitcoin. You've had bear markets in Bitcoin. You've never had 7 candles in a row down on Bitcoin.
Wow.
So Bitcoin is down 7 months. Count them with me for yourself. And they are big volume months. You'll note they're fat boys. 1, 2, that's 2 here. 3, 4, 5, 6. You're in the 7th month. You had 3 big ones here. Then you had a green candle. That was a green candle. You had 2 here. Even in the bear of 2020, 1, then you had a green candle. You had 1, 2, 3, 4, 5, maybe 6. You may be on the monthly on 6 on this particular. You had 6. This is in 7. Then you had a green candle. So you can see 7 big, high volume bear candles. This is horrible. This is horrible. So in terms of the digital gold, the volatility, the loss of value, the high, none of that is justified at all. Digital gold is not meant to be particularly volatile. It's meant to be value preserving. Steadily value preserving. It only tends to be volatile when everything else is in a massive devaluation. That's when you get steady and ridiculously disorderly upside moves that lead to the bubble accusations of Bank of America. Bank of America should look at the US Treasury book and look at how many trillions have been minted and how many are owed in lieu of unfunded liabilities to understand a full bankruptcy as to why gold is going up and the dollar is underperforming other major currencies. And Bitcoin in that environment should be absolutely winning and killing it with a much smaller market cap than gold. What is it doing? It's just given you a record 7 months. Now, this month is not done of downside in gold ounces. Sorry, it doesn't cut the mustard. It's a fail. Wrong people behind it, dirty hands, blackmailers, all forms of stuff. I'll leave the morality and the detail of that for everyone else. But in terms of performance, functioning, it's an absolutely atrocious performance for capital preservation. It's an atrocious performance relative to other things that are far faster and cheaper. It's a fail, and a fail again. You're not going to find a Bitcoin maximalist sitting here.
Yeah. So yes, it's pretty interesting because like the narratives that drive the bull markets in Bitcoin, and now we're at this point where you had President Trump went to the Bitcoin conference and spoke in 2024, massive adoption. He appoints a crypto czar, and all of these different dynamics, and you would think like, okay, this should be the most bullish it's ever been. Now you have the federal government backing Bitcoin.
And they got rid of Gainsler, who was supposedly holding up a lot of the passing and XRP lawsuits, etc., etc.
Yeah.
You couldn't have more reversal of mainstreaming acceptance on crypto, and all you've got is an absolute puke fest to the downside. It's a massive fail. And if you were preserving capital in Bitcoin, you could see further downside right the way down to the 30s or to the 50s, low 50s at that. Sorry, I'm not interested.
Yeah, definitely. Yeah, I appreciate that. Okay, Francis, where can people connect with you? I appreciate this masterclass that you've just given us. I mean, we went through a lot of quality content here, a lot of charts to gain some understanding of what's happening in the markets and such. Where can people connect with you, connect with some of your services? You have a YouTube channel and such. Plug the audience.
Yes, sure. So in essence, we feel that this is an extraordinary time, and extraordinary measures are actually meritworthy in extraordinary times. And as I've continued to say, and I'll repeat one more time, that this is specifically a fiat and debt debasement contagion, and it is beyond the scale of any before it. So this is not me seeking to be uber black-pilled or the dramatic in any essence. This is beyond the scale because we have a synchronized entire Western hegemony, and even China, as many of the dollar maximalists have pointed out, does have excess debts and problem in its property markets too. So debt and fiat debasement is a thing. So physical monetary metals are absolutely central and key to any one capital preservational, but I also fear the change that is going to be brought about is going to be violent. The disorderly nature is going to become contagion-esque, and it's probably going to be masked with other socio-economic and geopolitical events simultaneous to it, because it is going to be so so harsh and so large. The Great Depression was broadly an American phenomenon. I wouldn't say Europe skipped through easily, but it was very much localized in that sense. Now you're going to have a depression of an entire hegemony, the Western hegemony. And I would encourage people, and again I say the harshest thing, but it's the test. I don't come here to give you easy tests. I come here to say, how badly do you want to win? And establishing a footprint outside of the Western hegemony will serve you incredibly well. Stack precious metals. Our community is specifically geared, and we have taken inordinate sums out of the market recently with reliable broker partners on longing gold, silver, on leverage trading and turning it into stack. And we are benefited immensely. So if you wish to build wealth, you wish to act towards protecting that wealth, because there's going to be overarching capital gains, unrealized capital gains, confiscations, all forms of attack vectors on people's individual wealth. If you're interested and recognize that, and you're ready to start establishing a broader footprint, then watching our channel on YouTube under the Market Sniper may be of interest. We do cover the crypto, or we don't feel the action is there at the moment under the Crypto Sniper, and we're also on X under the Market Sniper. So feel free to come and subscribe and watch. Technical analysis is our friend. We don't feel it in our waters. We look at the charts. It's rational. It's HVF method, and we're the only place where you can find that.
Yeah, you trade with the chart, not with your heart, right?
100%.
That's good. All right. Well, appreciate you for coming on the show, Francis. You all be sure to hit the subscribe button if you haven't yet. And Francis, look forward to having you back sometime, man. This was very valuable, and I appreciate your time. I'm sure the audience appreciates it as well.
Absolute pleasure, Darrell. Thanks for having me on, and I appreciate yourself and well interviewed. And it's great being on your guys' channel. And I hope people also hit the like and support your channel, because we need people that are bringing this message to everyone. We all have, beyond becoming rich, a little bit of a goal and a role to play in serving others. I'm lucky that I'm at a certain level of manifestation and mental intellect to have seen this. If I was 13 right now, I couldn't serve you. But somewhere else, somebody is 25, he's yet to read the books we've read, he's yet to do something, and we need to be helping, waking everybody up. We have a role to play. And we all, John the Baptist or bit part players, and some of us might have bigger roles to help bring everybody to some form of safety. This does feel like Noah's Ark, and it's almost biblical in my sense, and it feels like a spiritual war in many ways too. So thank you for your work as well.
Yeah, appreciate you. All right, you all take care.